Hello everyone, welcome to this next edition of Market Guru. Today I have with me Shiva Galrani, who everyone knows. He has also taken a session with us in one of the e-Technoc couple of years back for his strategy, which was based on USD, INR and Nifty, which is still popular. A lot of people still pester him with queries and latest data and all that. And as we had told that time, and he still continues to do that, he doesn't look at charts or the market during the day. His day when he is having breakfast at home starts when Indian market opens, since he's in Dubai, and when he is having his lunch, that is the time Indian market closes. So that is the only 10-15 minutes when he looks at the market while having breakfast and while having lunch. That's all, and that is why he has developed huge number of systems. In fact, I think 12 or 15 systems which he has developed, which were based on Excel when I spoke to him last, across all instruments, which includes momentum, long-term cash delivery, futures, options based on bank Nifty, even stock options. Of course, everything is positional, nothing is intraday. But that is what he is doing, and in fact, of late, I think last couple of years, he has started the same thing in the US markets also. And he said the same principles work everywhere, so it doesn't matter which market you are trading in. And since he's in Dubai, he can trade that market also. So today we are going to talk about a lot of people always ask us how to hedge long-term portfolios. So the key thing here is having a long-term portfolio means you are not going to sell it at all. There are people who have portfolios which are maybe 10 years, 15 years, 20 years holding, and for whatever reasons they don't want to sell that. But there is a technique where you can hedge that portfolio, and that is what he's going to talk about today, which he has been practicing for the last 4-5 years. So welcome, Shiva.
Hi, Abhijit. Thanks for the introduction. Correct, nicely introduced. Welcome everybody. See, the main reason of this portfolio has started as a base from my another one system, which is the covered call, which it's a simple covered call. I just buy stocks in cash, and I'm holding them from so many years, and every month I keep on selling calls against those to make some extra income and to bring the cost of holdings down. So there was a time when I used to discuss this with in those times with Prashant Malik, and once he was in Dubai and with his son for some chess championship, and so we got together and we were whole day together and we discussed on this. So then he gave this idea to me that to hedge the portfolio with leaps. Leaps in this is long term equity options, long term period equity options. So in our case it is mostly the December is where we have the liquidity. So this is what he had suggested to me, and then there was a follow up session by him and Alok Dharia, I think as a part of Greek software. They had shown how to do this, how to hedge the portfolio, how to even keep try to make even the insurance cost free, which is what I have modified a little bit to my situation. And I have that is what I'm sharing now. This is exactly what I am doing. Maybe not suitable to some of you, maybe suitable to some of you. You pick up this idea and then try to see if it suits to you, and modify it according to your needs, and then carry it forward and share with people as much as possible.
In fact, that is the biggest thing which the last line which you said was very important, and that is something which I have been talking about for so long. Whenever you see a system which someone is trading, it is not necessary that the same system will suit your temperament and your other factors like account size or whatever. So it is a very necessary thing that you understand what is the system, adapt it to your own needs, and then start trading it.
अभिजीत, मैं तुम्हारे साथ दुकान में जाके, तुमने एक टी शर्ट लिया 34-38 साइज का, पसंद आया, तो मैं वो 38 साइज में मैं फिट नहीं होएगा, मेरे को 42 साइज चाहिए।
वो तो 45 लगेगा।
तो मेरे को 42-45 साइज, whatever the size which fits me, I will do that. So this is what in real life happens, and this is what we should follow even in trading, because on internet, on Twitter, you see many people saying many things. Not all of them may be true, some may be true, some may not be true. So you pick up the idea. The only thing good in Twitter or any other social media is that the idea is free.
You get ideas, yes.
That you need to test with these ideas, and there is enough abundance of free resources available everywhere to do whatever back testing or the Excel में सीखने के लिए. Like I have used the COVID period to get into Python. So Python सीख रहा हूँ. अभी आजकल Excel में कुछ नहीं करता हूँ. So everything is happening in Python. So this is how you learn and adapt, and you get to see new ideas, use them, and see if it works with you, or if not, you need to change it. Maybe sometimes, most of the times, it doesn't suit to you in the end, then you drop it. वो तो है, there is always few ideas which won't work at all, looks good on paper. So real life में you need to have this principle कि don't take anything on face value.
Absolutely perfect. Yeah.
इनफैक्ट हम लोग स्टॉक मार्केट में भी हम लोग फेस वैल्यू देखते ही नहीं है. स्टॉक का ₹1 का फेस वैल्यू रहता है, बट
मालूम
वी
ही नहीं
ओनली
रहता
लुक
क्या
एट
फेस वैल्यू.
फेस वैल्यू. किसी को फर्क भी नहीं पड़ता. जब डिविडेंड डिक्लेयर होता है तभी हम लोग देखते हैं, अरे आईटीसी का फेस वैल्यू सिर्फ ₹1 है. सो वी लुक एट द डिविडेंड ऑफ 100%, बट देन इन द एंड इट इज ओनली ₹1 पर शेयर. So then that is when we realize the face value. Same thing happens in life and in trading also. Like you get to see a system, but when you trade it, that is the the actual market value of the system you will get to know. Okay, so both ये हो गया. So let's start with the portfolio hedging of your with leaps options. Leaps here is long term. This is actually a US term. So this means a
Basically,
long term,
you can call it long dated options.
long dated options. So okay. So calculating the first thing to hedge the portfolio, obviously first thing you need to know what is the value of your portfolio. So here the assumption which I'm making is that the portfolio which we are trying to hedge is a equity portfolio which is held for long term, and it is having good stocks which are having a decent correlation to Nifty. By decent correlation, as an example, I don't mean that 60% or 70% of your portfolio is Yes Bank or Idea or Suzlon or some of those stocks which are not having any major relation, news driven, or Adani or something of that sort. So something which has a decent correlation, and it's a portfolio. It is not like one or two stocks which you are trying to hedge. So it should be like I would assume at least minimum 10 good quality stocks which are being held by you for a long time, and which you are hoping to hold for a long time, irrespective of whatever the market ups and downs happens. So take the portfolio value, the market price of the portfolio today, not the actual cost which
Not
you
the cost.
purchased it at. Not the cost, because that is sunken. What is the value today is what you want to hedge.
Yeah.
So take that value and divide it by the value of Nifty today to get the quantity of the puts which you need to be purchased. So in this particular step, what we are simple doing is the best way to hedge your portfolio is to buy puts against this. So that is what everywhere in the world is practiced. The options were started with a mechanism to give us a mechanism to hedge the portfolio. That is where the options started. So usual way people do is you buy an ATM portfolio, ATM put option. So that is the cheapest one which you are able to get for the value. But then there is always a risk there, because the time value you have to decide, and even a small ups and down in the portfolio will lead to erosion of the premium which you are paying for that. So what we are doing here is we are taking the value of Nifty and taking the value of the portfolio to arrive at the quantity of the Nifty puts to be purchased. Which put to be purchased is usually around November. I start looking at next year December put, which is
Okay.
so around 11 to 12 months away, which is 12 to 13 months away. So currently, so I usually go for 2000 points away from the Nifty spot value and try to be at the big round numbers. So it is 19,000 or 20,000 or 14,000, something like that. Usually in Indian market, you don't have that much liquidity, even in the 500 options, 500 denominated. So 13,500 or 19,500 will not have that much liquidity compared to
Right.
the 20,000 and 90,000. So it is always, just like we say, it is always easier to get in, but when you want to get out, that is where the problems start. So you will have quite a lot of slippage there. So So it is always good, go into the big round numbers, and you start purchasing by small quantities. Like if you want, if you, as per your portfolio, if you want to buy around 16 or 17 lots or 20 lots, so you don't buy everything together. Buy in small quantities, keep orders open at 100 rupees, 50 rupees away from the price, and keep on wait for them to be hit. No need,
Yeah, in
you
fact,
are looking.
there is
Yeah,
no hurry to buy it, right? There is no hurry. You can buy
exactly,
it spread over a
exactly.
few days.
You can spread it over a few days, and see, on any one single particular day, if there is a news driven 100 200 points wild swing, then you are then stuck immediately. So I always try to spread it over. I know, like, in from August up to September onwards, I keep a watch on December, so that just to see if the liquidity has started pumping in, and you keep on buying small quantity, and simultaneously you liquidate your current holding which you have, so in the whole cycle. So the idea is, don't jump in together everything. And because the bid ask spread in the December options is always, there is quite a lot of algos at play there. So you will always find, like, if you put in an order at 1400, within, before even you press the enter button, there will be an order at 1401.
Shiva, 1 minute. Before we proceed, I think it is important because you have not talked about which strike price. You are talking
Hmm.
about deep in the money options when you said
Yeah, so
1400. Yeah.
yeah, so that's what I put now, 2000 points away from the spot value, deep
Away
in
in
the
the
money.
sense in the money.
In the money, yeah, okay. So yeah, it is deep in the money. When I come to the further slides, I'll show you. So
Yeah.
start purchasing them deep in the money. So currently, for example, if Nifty is at 18,200 today, we are recording this on the 20th, so Nifty has expired at around 18,200. So we will try to look at 2000 points away, which is the nearest round number is 20,000. So we will look at 20,000 put expiring in December 2023, month expiry, and uh, 2000 points in the money, so 1800 points in the money.
Yeah.
Okay, so when we go to the prices, I will show you that currently the 2000 put of December expiry is available for 1300, approximately that price. But like I said, it is 1800 in the money. So please do not be under the impression that you are getting something 500 rupees free money and put everything into it. This is not the case, because the puts are deep in the money. They have quite a lot of time value in it also, and they are priced based on the future cost of carry. So the 6 months of Nifty futures pricing is also baked into it. So there is
Yeah.
nothing free in the market. When we come to the Nifty snapshot, I'll show you from live market how to calculate that also. So if you are not going to do anything further, we can stop this part of the system. If you are only looking to hedge your portfolio, so you are hedged till the time Nifty goes to 20,000. Even in December, if Nifty is at suppose 19,800 or nearly 20,000, even that time your put value will still have around 200 300 rupees,
Yeah.
because it's still having 1 month or 1.5 month time at that time. So you will still get back 1300 or something of that sort, and then you roll forward to the 22,000 or 23,000 at that time. So you still have 2 300 to salvage from the put value, and your portfolio has increased in the meantime. So your portfolio
Because
has
it is
increased 100
because it is correlated with Nifty. That is important.
Exactly. That is
Yeah.
important. That is why the first line itself I told that don't expect to hedge a portfolio of junk stocks with Nifty and try to get
Yeah.
away with it. Okay. So here, if you want, you can stop it, and instead of looking, you can recover the put cost over that. If you're not looking to recover the put cost, we can stop here with the simple hedge. This is simple, like your vehicle insurance. You pay the insurance premium. Accident हुआ तो पैसा मिलेगा. Accident नहीं हुआ तो you just lost the premium. That's it.
Yeah. Yeah.
Now, the second step of this, as I had learned from even Prashant and everybody, is that we can short weekly put options against that to recover the price which we have paid to the leaps. So what is that? We can add one more layer to the hedge. This is a separate step which you are trying to do accordingly, where you are trying to short ATM or nearby ATM options to recover some portion of the money which is weekly expiry. So you have 52 weeks to recover 1300 rupees.
So matlab
So
ye like they call it a double-edged sword. So this is a double-hedged trade.
exactly. So what I am trying to do here is I am trying to buy an insurance premium for my portfolio, and I also want to get money back on the portfolio on the premium. This is like your
Yeah.
money back. So weekly, I'm trying to recover that portfolio premium which I've paid in by this method. So every week, Thursday evening, Thursday just before expiry, 15 minutes before expiry, I log in and I see where the Nifty is and which is the option which is available nearby 80 to 100 price, anything which is between 80 to
For the
100
next
uh,
week.
for the next week. So on Thursday, expiry next Thursday. So 7 days to expiry.
Yeah.
So why I have chose this 80 to 100 is because I wanted to eliminate any further study to be done on delta, wicks, and other things. Everything is baked into the price, which is what I believe. And so if market is moving heavily, like in the COVID fall, if it was moving 600, 700 points in a week, you could get the same 100 rupees. You will have to go to maybe 800 or 1000 points or something like that from the ATM. So if Nifty was at 10,000, you would be able to get 9,200 or something of that put for 100 rupees. So you are getting
Yeah.
800. So that is what. And nowadays, when we are in this situation where VIX is very subdued, you are able to get 80 or 100 rupees only at the ATM or 50 points away from the ATM.
Right.
Okay, now one point here which needs to be made is that in the earlier step I told we are looking at big round numbers, 20,000, 19,000, not even 19,500. Here when we are trying to sell, because there is enough liquidity in the weekly options,
Correct.
we are okay to sell even the 50 options. So I can 18,050 option also I will be okay to sell
Yeah.
because there is enough liquidity in that.
And you are talking only about puts, long-dated puts and weekly puts. There is
Weekly put.
no trade in a call or anything like that.
For call I have my portfolio. That is the
Yeah.
biggest that is the best thing to do. Okay, so so now we have decided what to sell. How much to sell is 75% of the original December quantity which you have. So if you are having 20 lots of December, you will sell 15 lots of the weekly.
Okay.
Okay, so this provides some credit. So now what will happen here? So if for example you are doing 100 point away from ATM short, and in the week if Nifty falls 200 points, just as an example, 200 points, so on the put side you will be paying back 100, which is your break even. So you did not make money on the put to short, but your long dated options has appreciated and your portfolio has depreciated, so you are hedged. This is exactly what we are trying to achieve. If it falls more than 100, the 200 points, then you are losing money on the weekly, but then your long term is having more quantity and more delta or more time baked into it, so that will rise much more than the loss which you have done.
Uh,
Yeah, no,
uh,
you are getting 100 rupees premium also, and you are getting a ATM benefit. You are doing a little just OTM so you are doing, so you are 100 points away also. So the 200 points movement, which is your break even point, that is very well compensated by the increase in the December options.
yeah, what I was saying was when you are looking at the weekly expiry, there,
Mhm.
even if you are in a loss, that's fine. You said that is compensated by the increase in the long-dated puts, but that is only for that expiry. That is an open position in which you are in a, I mean, let's say 2 months, 3 months down the line, Nifty
Yeah,
again starts rising. So that,
exactly. So
so
see,
again you'll have to
there is
take
so
a
this
trade the
is
next
this is
expiry.
where, yeah, so this is where there is a little bit of judgment which comes in. So there will be periods when Nifty doesn't do anything. There will be periods like the COVID fall where Nifty will fall 800,000 points in a week. So there is so you are also going to face some situations where your the shorted options in the weekly will be 200-300 points above, I mean below the break even.
Break
So
even, yeah.
at that time we need to take a judgment call that, okay, my long term options is still gaining, so can I roll the weekly options to next week or maybe to a different strike to get little more premium and little more coverage on the what you call the fall which you are getting. So there is that option. And on the other side, if the Nifty rises heavily, So like say if you have a 400 500 points rise in a nifty in 2 3 days after you have shorted the option, maybe you, because that the shorted options has from 100 it will come down to, because of the time, less time, it may come down to 5 rupees 10 rupees. So instead of holding on to that, you short that, you close that, and you move to the next week, you get more premium, little more premium, and you're rolling it to the next week. So that is how you have to play, because see, there are too many moving pieces here. There many things can happen, market can go all the, like your favorite quote of your Ravi Shastri, not all three things can happen, all five things can happen. All five things can happen. Nifty can rise heavily, Nifty can rise only moderately, it can be flat, it can fall moderately, or it can fall heavily. Anything can happen. And we have seen, like, not, it is not over a prolonged period of time. We can see these five things happening simultaneously back to back days. We have seen that Nifty falling 400 points in a day and next day 400 points up, and then suddenly nothing. So those things are very much possible. This is what the only rule in market is, there is no rule. So
you have to make your own rules.
Exactly. So you have to adapt to the rule. You have to adapt to the rule. And so before we go to the next further, so I'm again reiterating, this is not a trading system. So the objective here is to hedge your main equity portfolio for long-term options. This is the system which helps me to avoid watching the market during the day, because my portfolio also suffers. So it also suffers during a fall. It's not that I'm immune to it, but then at least I don't need to be panicked when I see a what you call that panic when you see a circuit
Big fall.
circuit stop in Nifty, because believe me, that that half an hour or that time when there is a circuit breaker in the market, everybody is only seeing red in their portfolio.
Right.
That time, the decision which you take is what will impact your portfolio for a long time to come. So if you are
Absolutely.
having
I had
this
a lot
hedge,
of people sell in panic,
exactly.
finding the
So
portfolio.
I have seen many people waiting with the button on what you call F2 or F1, the red color. So
True.
they are waiting to press at the market order. And always, if you see, when there is a circuit break, and when the circuit break opens, the lower circuit break opens, immediately you have a huge volume coming in, and then market starts bounding. It is because of that only,
Right.
because many people panic, and that is the panic bottom. So
Yeah.
we don't want to panic here. We are because we started with the notion that we want to look at a long term portfolio, but jab ek circuit break dekh leta hai na, then people throw away the notion of the long term portfolio, then it becomes immediately exit,
So the
and we
notion
don't want
leads
to
to
do
emotion.
exactly. So this system will help you that, and it is not a trading system, though. With the weekly options we can end, we can tend to be like, make some more money out of it, in fact. So it's
In
not
fact, this
only
is since you are long in the long dated options and short in the weekly, you will also get a good margin benefit, right?
exactly. So in this, your cash outflow will be, first of all, your portfolio which you are bought with cash, and the long dated options which you are to buy with paying 100% cash, obviously, and the margin required for shorting the puts, the weekly puts, that can be paid up by pledging a portion of your portfolio.
Yeah, in fact, that is a good idea. Yeah.
That so there is no harm in doing that. So anyway, your long term portfolio, in fact, I would suggest you to do that, because then you will not do a what you call a hasty decision of liquidating your portfolio, because you have to
Yeah.
wait for the end of the day, unpledge it, then only you will be able to sell it.
Right.
So if this is any other questions, otherwise then I'll go to the what you call
Yeah, you
whatever the
can.
screenshots
Yeah,
are.
go to the next slide. Yeah.
Okay, so this is a simple calculation. I did this last week. So over this week, there is nothing much changed. So if the portfolio value is 1 crore notional, I'm taking, and so Nifty value was 18,314 last Friday close. So approximately you had to sell 546 of the portfolio Nifty options. So I've taken approximate value at 600. So which is 12 lots. So for that, we need to buy deep in the money outputs in sorry puts 20,000 put of December 2023 expiry at 1,300. So 7,80,000 approximately is the cash which you need to put up for this. So the options are in the money by approximately 1,700, but you bought them for 1,300. 400 is not free. So we know that we had 32 weeks to recover the cost, because I'm doing this in starting this calculation in May, but usually I start it around October end
Yeah.
or November. So every week you will sell 100 or 200 points away, depending upon the approximately 80 to 100 premium to the
Every
receive.
Thursday just before close.
Exactly. So I will tell you the decision points. So your decision points starts on, say, today, or rather if somebody is doing it next Monday. So first thing is your portfolio is there. There is no decision point required. Second is which option to buy. Okay, I made it clear, 20,000 put option to buy December. You bought that. Now the decision point is every Thursday you are only selling whatever the premium which is available in the next week expiry at 80 to 100 rupees, whichever is the low, nearer to that. So you sell that 3/4 of the quantity. So in this case,
Yeah.
for example, I had 12 lots of December Nifty, so I will only short 9 lots. So that you keep it. Next Thursday, coming next Thursday, what you are going to do is you are only looking on the current expiry, which you have, the current open position, whether is it in the money or out of the money. If it is out of the money, you will find it that it is available at less than 1 rupee, just leave it to expire. Or if it is ATM, you don't want to take the risk, you close it. Or if it is in the money, you close it. That is the decision you have to take for the existing. For the new one, just look at whichever is the premium available at 80 to 100 rupees, press the button, sell it, and just shut down. That's it. It will be over within 3 to 4 minutes.
Okay.
Clear?
Sounds a very simple system.
But believe me, once you are taking that step back and not looking at the markets daily, things are very simple. It is only
Yeah,
when you
but
are looking
from
daily.
your experience, I mean, you are definitely the purpose of selling those weekly puts is to recover the cost of the long dated buying, right?
Okay, okay.
So, based on your experience of whatever 4 5 years, I'm sure in the COVID period you made a loss in the weekly shorting, but otherwise,
Initially,
apart from that, yeah, sorry.
initially. Initially in the when suddenly the market started falling. See, always that portion, like currently we are in a subdued VIX portion, correct?
Hmm.
So ultimately for that leg of the weekly short, you are short a VIX regime which is very very low VIX regime. So
Yeah,
if the VIX regime suddenly expands, which means there is a huge volatility in the market. So the initial period you will find that you are making a little bit of loss. But then what
yeah.
will happen is, as the volatility increases, so the 80 rupees 180 to 100 rupees premium, instead of being ATM or just 100 points away from
That
ATM,
goes deep OTM. Yeah,
that will become it. That's what I told you in the December 2020. I have sold like 800 points away puts for
okay.
this value. That time it
And
becomes like, controlling your greed. That time it becomes controlling your greed. The just 200 300 points away put options are available for 300 400 rupees. But then always in the stock market we have to be very very the one thing which we have to have in our mind is that there is nothing free in the market. Everything is priced in. There are
yeah,
many more algos. There are many big guys who are having this as a full-time job, who are monitoring this. So it's not up. There is nothing left free on the table for us. You have to fight for everything. So you have to be very very careful, like what are you doing. And in cash portfolio, ultimately it doesn't matter, because you can hold on to it and there is no M2M which you have to pay. But in this kind of
right.
short options, you have to pay up very very heavily if you take a wrong decision. So
But based
never
on your
be hasty, never be hasty, never
experience,
be hasty. Yeah, tell me.
based
Never
on
be
your
hasty.
experience of last 4 5 years, I guess it might take what 8 or 10 months to recover the cost of that long
I
dated puts from starting.
maximum around 6 months, or if it is a heavily what you call volatile up and down period, then 6 to 7 months it takes. Because some weeks you will lose money also. It's not that
Yes,
every week your option will expire at zero. Some weeks you'll have to pay something.
yes,
So if not every period will be like this past 3 4 months where volatility is dead.
yeah, right. So basically,
Okay.
you're buying insurance for hedging your long dated, long term portfolio, and even
Hmm.
that insurance is something which you are getting paid back through shorting weekly options.
Exactly.
Yeah,
So
this,
I will go live to the Nifty chart now. Let's see.
yeah,
So You are able to see my NSE website on the screen?
Yeah.
Okay. So this is the Nifty for December 2023 expiry.
Yeah.
This is the option which I told I am there, 20,000. So
Yeah.
it closed at 1329, the LTP 1329, and even on Friday it had a volume of 144 contracts sold.
Okay.
So there is volume, there is liquidity, but little bit. So this is 2000 points away. But even if you see December ATM, it had a 2800 quantity. So there are people hedging
Yeah.
in December, but we are going very much OTM. It
And how much is
if it is
the spread
sorry, ITM,
normally?
not OTM, sorry, ITM. Yeah,
How much is the
OTM will
spread?
have OTM will have, like, liquidity, but it is ITM is where the liquidity sucks.
Yeah, but based on your experience, what is the kind of spread we are talking about? 10, 20
You are
rupees or much more than that?
no. You in good decent times you can see spreads of maximum 100 rupees. So that time you put in mid price, you get 40-50 rupees in the away from the last traded price. But then we
So
are not
that is
putting
very important. There is no hurry to buy this in, first
that.
of all, in one shot. You can take buy it over a period of few days,
Okay.
but wait
All
for your
those
price. Don't rush into
yeah.
it.
All those mistakes I have done, and that is why I put it in the slides specifically, that you don't. I have ended up paying quite a lot of slippage there.
Yeah.
And because believe me, more than real people, the algos are at play there. There are quite a lot of algos. You can if I don't have live market now. If I had shown live orders, so if I put in an order for say 1324, which is the bid price, if I put in an order for 1325, before even I press the button, already the price will move to 1326 or 1325.05, 510
Yeah.
paisa away. So just to lure you to bid more and more. So usually I start at mid price, one or two lots, few lots, and then start putting orders for 50 rupees, 100 rupees away in that day. Because in a day, Nifty usually, like, say, falls 50, 100 points. So your the chance of your order getting triggered are more. Morning order dal ke rakh dene ka, and then if it triggers, it triggers. That's it. If it doesn't trigger, next day.
So how many days does it take? Even let's say 20 lots, like I said, 4-5 days.
20 lots is nothing. Maybe 20 lots can be done in maximum 2 days.
Okay.
For people who are, like, during the day, who are watching the market, it can be done even within 1 day or 2 days. For
Yeah.
me,
Right.
I put few lots in during the day in to away prices. So मेरे को चार maximum 1 week के अंदर सब हो जाना चाहिए.
Okay.
Okay, so this is the
Okay.
option which we are looking at. So like I said, so Nifty is at 18,200 now live. So this is 1,800 points in the money. This option, 20,000 put option, but it is available at 1300. So you are having a 500 rupees benefit, which is actually not a benefit, because you calculate the cost of carry. Cost
It
of
is a
carry
cost
in
of carry. Yeah.
Yeah, cost of carry can be easily taken where there is a future. So the difference between the spot and future price, you can see the premium, and that will be the cost of carry. But in this case, because there is no future, usually you look at the call minus put at the ATM price. So 1100 minus 400 is around 700 rupees, and this is 200 rupees away from the ATM. So 200 points, that
Yeah.
also you reduce, which will come to the approximately the same price which you are looking. So there is no free lunch anywhere. So the what you are paying is the cost of carry. So against this, you look at the weekly options which you are looking to say.
Yeah.
So like on Thursday I had sold this 18150,
Yeah.
because yesterday Nifty fell around, rose about 73 points. So it was
Yeah.
18120 or something. Because of the low volatility regime, I'm only getting 18150 put option, which is what I have sold.
So that time
70.
that was higher.
That was around 85 rupees is what I had sold.
Okay.
So this was the thing, because I don't take much time to take this decision. Price, enter the button, flash.
Just execute.
Execute. No, because
And
all my study, all my thought process has gone in before the day opened, one day before. So I
right.
don't take any instantaneous decision during the day. when I see the market. So I don't know, I don't care, and I don't look also. Even if I'm looking, so I don't even bother to take any. I don't change my decisions based on the situation which is happening at that time.
Yeah. And another thing is this shorting weekly options that you can easily do within a couple of minutes because there enough liquidity is there. So shorting
Yeah,
10
see,
lots will not be a big deal.
even you have 26 lakh options,
Yeah,
lot sold there yesterday on Friday. So this is like crazy liquidity. This is people are playing lottery ticket. You know that weekly
yeah,
options are like lottery ticket. So you are buying. The people are buying, and you should see the volumes on Thursday for that day expiry. The what you call 0 DT, which is the craze. So the on Thursday the volumes blows up in Nifty and Bank Nifty. Similarly for
right.
Fin Nifty on Tuesday. So people are addicted to lottery tickets. So you can't help it. So that's
Yeah,
their.
yeah.
So ये है अपना options. So like I
So
said, there is hardly any liquidity in the next year. So if you go to December now, if you see there is only 2 lots sold.
oh yeah,
And even if you there are other quarterly expiries in the middle, like in the March, if you see there is nothing sold. In June there was only four, but December did not have any sale. So you hardly have any liquidity in the other quarters. In unlike US markets where I get 3 to 5 years also, I get ample liquidity, which
okay.
is not there in US. In India market it is not deep enough. Maybe down the
Actually,
line.
this is something strange, right? India is supposed to be the biggest derivative market in the world, but in terms of liquidity, it is poor.
Yeah, this is like, all the liquidity is loaded into the weekly options. If you
Ah,
remove the weekly options, and you try even this one, no, why you try something like SRF or some stock, you try today for selling June options, you will not be able to sell.
yeah, yeah, that I agree.
If you select just because I am having this as part of my what you call
Covered call.
covered call. I struggle. I on the yesterday was my day to cover SRF and go to the next month. So here it is running at something around 2,400. So if I add 10% to it, which is around 2,600, 2,800. So if you see here, there is hardly any liquidity there.
Yeah.
Nothing you can sell. So you will not be able to find liquidity even in stock options, even in the Bank Nifty. Bank Nifty, have you tried the liquidity of Bank Nifty in the what you call the July expiry? Just see the lots
Pathetic.
which has been sold. Pathetic. But the same Bank Nifty you see in the 25th May, पूरी
That
दुनिया
will
इधर
have.
लगी पड़ी है. सब लोग इधर लगे पड़े हैं. This was like that single number scratching lottery. People want to scratch and with एक का 10 बनाने का है एक दिन में बस.
Yeah, yeah.
So, but everybody has their own fancy. I can't tell anything, but it's their own decision. I don't go into this now. So this is the way you do it. And now coming back to the portfolio. If you have any queries till now, otherwise,
Yeah, I think it is fairly clear about the steps to be taken.
yeah.
My only query
So
was what happened in a scenario like COVID times when it
I will show
crashed
you.
so
I will
badly.
show you.
Yeah,
I will show you that. And I don't have my screenshot of the trades which I did, but I have something which I put on Twitter. I will show you that. So
yeah,
once we do this, there are 5 scenarios, like I told Ravi Shastri. So there are 5 scenarios here. So Nifty, if it rises heavily or mildly, or if there is no movement, the end result is the same. Your portfolio will rise or fall in line with Nifty, which is always the case whether your portfolio. The December puts will lose value and your weekly puts will expire at zero. If Nifty falls till break even, your December puts will make money, but your weekly puts will break even. And if it falls more than break even, you will have losses in the weekly, but your December puts will make up for that loss, and also
right.
your some portion of your portfolio also. So now what happens if you are looking at what happened in the 2019 or 2020 when the COVID started.
Yeah,
Now in the case of 2020, my decision to roll forward to the 2020 expiry was happening somewhere around this place in October, November, late
yeah,
October. late October, early November. So this was Nifty was somewhere around 11,200 at that time. So I had gone to 13,000 put. I could have gone to 14,000, but there was not ample liquidity. So I started with 13,000. So it's still 1,500, 1,800 points away. I was happy with that. So from there, Nifty started going up. So little by little, I started recovering the money. This somewhere around January is where it topped, and
So
then we had
was it the case that by before the time Nifty topped out, you had already recovered more than half of the
not
cost of the
half,
put?
not half. It was 10 to 15% only because initially at that time the Nifty volatility also was less,
Yeah,
because the market is in a rising tendency. The volatility is little bit lesser. So it's only when this portion it started happening, when it broke this below this is when the fund started, and I started making losses in the weekly options here.
yeah. My point is, let's say you say 6 to 7 months. Sometimes you might get paid back by the short calls, short
Hmm.
puts of the
Hmm.
weekly. So once
Hmm.
that happens, then after that there is no point in continuing doing that, right?
Yeah, it's up to you. So it's up to you.
Yeah,
Either you can continue to use that as a separate system, or you feel that okay, मेरा insurance का भी premium मिल गया और मेरा गाड़ी भी safe है. So
uh,
let's continue with that. You for the next 6 months you don't do anything, just let it ride. Up to you guys,
correct.
whichever way. That's why I told it. There are little bit of decision points which you need to do according to your temperament.
Yeah, right.
So, and here is what I was saying, that there are other decisions which you need to make. So what decision I took here is that when it was at around 13,000, my what you call my the long puts. So when Nifty broke between somewhere around 11,000 again, because the market was falling heavily and the VIX suddenly shot up. So I rolled down from 13,000 to 12,500.
Okay.
Okay, so around this one is when the Nifty closed below 10,000 is when I uh, got rid of my put options altogether.
Completely.
The December put options, because I felt that the hedge was not required at that particular time. From 12,000 it has fallen. I didn't feel that it will fall much more. I was lucky that what I thought, after a little bit of pressure, it gave me back. But then I had recovered most of the cost which I had done. So
Yeah.
if I take you to my tweet at that time, so in the month of around February 28th, I had tweeted that I had covered my 12,500 and rolled into the 12,000 put at that particular time. Nifty
Yeah.
was somewhere around on 28th February. Where is 28th February? So this one, 28th February, Nifty was at around 11,000. So I was 1,000 points away.
Yeah.
So, and going forward on March 12th, I exited the 12,000 put. Typo there in the tweet, but so on March 12th, I had exited the this one completely. This is the 12th
Yeah.
March, where Nifty closed at 9,600. And this was, if you remember, earlier we had this same value as a Nifty top in 2000. 9632, that was the earlier top,
Yeah.
where it had
Yeah.
so that was there in my mind, in somewhere in the behind. So I took a risk and told that okay, I have covered myself for the fall from 12,000 to 9,600. From here, even if Nifty falls another 10% or 15%, my portfolio is strong enough to take care. So I got rid of my this one the long term puts, and also short term. I just rode it blindly at that time. So
Okay.
on March 12th, I sold everything, and I didn't need the parachute. So I that's what I've put here.
Because
So,
you felt that you are coming close to the ground. There is no need of a parachute now.
exactly. So I didn't need to do that. So that time also I had tweeted to both these guys saying that okay, you guys had helped me. So they were the guys who taught me this. So I am
वो
giving the
one round of drinks था वो हुआ कि नहीं?
अरे वो उसके बाद प्रशांत आया ही नहीं, वो कोविड के बाद कभी दुबई आया ही नहीं वो. Prior to that, he used to come at least once in a year for the Dubai Chess Championship. But then I think after that, because of COVID, things got topsy
Yeah.
turvy across the world. So whenever next I see him and Alok, we surely have this pending on me. I know he will be
Okay.
listening to this recording later, and then we can do this. No problem. So this is how we do the hedge and take some decision. So the point which I try to make here is like, making these kind of decisions are easy for me when I have covered myself from 13,000 to 9,600, or
Yeah.
rather 12,000 to 9,600. If you are not having this buffer of your or rather the hedge, then you are looking at a notional loss of in your portfolio, and maybe other option trades or whatever, because everybody got hit in this. ऐसा नहीं है कि सब मर्द को दर्द नहीं होता बोल के portfolio will not take. Everybody's portfolio took a hit, obviously.
Yeah, naturally.
So everybody felt the pain here, but then you were covered for more major portion, and luckily for, so this decision which you took to hedge freed up some money for you and whatever. So you were able to seize this opportunity. I was able to seize this in the around this bottom. I picked up some
So
quality stocks like
maybe you could
Reliance and
have
some other
added
stocks.
to the quantity of your portfolio, not value, quantity.
Exactly. No, I bought quantity of few stocks which I had been eyeing, which looked like ridiculously priced, like Reliance at around 850 or something at that
Yeah.
time. So this was ridiculous price at that time. So you are able to take advantage of that, and you have that cash freed up also, because you remember you paid around 7.8 lakhs or 8 lakhs or 10 lakhs of your portfolio, which is 10% of your portfolio. You get free cash that has appreciated in value also. So you are getting
Right.
that cash. So 10 lakhs becomes maybe, so your portfolio, if it has lost 20%, which is 1 crore ka 20% is two, so approximately 20 lakhs. I'm expecting that you should have, at least your options also would have gone up by 20 lakhs at the time. So
Right.
along with the 10 lakhs which you paid, you also got 20 lakh appreciation in your portfolio. So 30 lakhs haath mein hai. So now you can invest more. So you are investing more 30% of your portfolio or 40% of your portfolio at a lower price. And
Absolutely.
that will lead to a bigger growth. And that was the turning point for my portfolio also. Like it grew multifold, because after that Nifty didn't, what everybody knows what Nifty did. So that this was a crazy move. Reliance from
Yeah.
850 to 2,400 where it is now, and it is amazing.
Yeah. Yeah. So it looks
Okay.
like a very simple system, but again, very rule based, and again, but the rules are also so simple. There is nothing to really. I mean, it's not a complicated rule, so it's very just 2 3 steps which you have to do, and
Hmm.
you don't have to do anything on a daily basis. You have to do just the long dated put once and weekly puts every Thursday. That's all.
Exactly. That's it. No decision to be done there other than that, because you have already done the main decision, which is that you are holding your long-term portfolio. You don't need to
Yeah, of
tinker
course.
with that.
Maybe nowadays there are very less, I wouldn't say less, but those kind of people are in a minority where the people have that long term kind of portfolio of 20, 30, 40 lakhs or maybe more. Of course, this cannot be done by people who have small portfolios. I mean, 10, 20 lakhs portfolio is not a portfolio worth hedging,
Doesn't
right?
does it doesn't make sense, because obviously 10-20 lakhs portfolio guy should not be doing FNO itself.
Yeah.
So that is my view. People do it on a 1 lakh margin. They trade 10 lots of Nifty. It's up to them. But then my thing is like, your portfolio should be at least 40-50 lakhs for you to even think of going into FNO.
Yeah.
So because the risk of erosion in portfolio is much less than the risk of complete erosion in FNO.
Yeah.
One swing move in Bank Nifty, if you are short a 20 rupee option going to 100 or to in the next 2-3 hours is much more than your portfolio of your Reliance falling from 2,400 to 850 again is very less. Once in a
Yeah, and
lifetime.
another big thing which also needs to be remembered is it's not just the value of the portfolio; it's the what are the stocks in the portfolio. Like he very, in fact, he has repeated few times. It has to be stocks which are correlated with Nifty in terms of beta and not junk stocks.
Yeah. That is given without saying, because you are trying to hedge something using Nifty, so that should be
Yeah,
comparable to Nifty.
right. So I think
Okay,
that
so
sums up a brilliant session, Shiva. Thank you for giving this session, and I'm sure people will like this. And in fact, this brings me to another phrase. Like we always talk about Ravi Shastri talking about all three results are possible. So now there is Shiva Galrani who says all five results are possible. That that
anything
that
is
was the
possible.
underlying point.
See, neither you know nor I know what will happen at 9:15 tomorrow.
Yeah,
And
I
what
only
will
know
happen
one
that
thing. I can guarantee you that market will open.
I don't, you don't, in some cases, it is not even that also. Anything can happen over the weekend.
Yeah,
So,
of course, not tomorrow. We are talking about Monday.
no, but then if for example, just as an example, if on Monday morning, due to some news, like yesterday's your famous 2000 rupee note news has come again.
Yeah,
So if something happens and market opens at lower circuit, just
yeah.
example, say, just like the early 2006 elections when AB Vajpayee government lost and you had back to
2004.
back
Yeah.
your famous quote, "Baad mein gaya Sensex."
Ah.
So that
That's
time
not
people,
my quote. That was by a
and
politician.
and I know. So that famous quote which was given and in the news channels, and immediately market opened with back to back to this one, what you call lower circuits. So if on Monday morning, Nifty opens with a lower circuit and it is locked in the beginning, what will be the mentality of the people who are in the market at that time?
Complete panic. Yeah.
I don't care. I will not even care.
That is the
So
biggest thing which is very difficult to behave that way when he says I don't care, and I really know that he doesn't care because he knows what he's going to do if and when the market opens. That's the most important thing.
I will not be able to take my few trades which I would have planned in the open. Okay, but then my portfolio is hedged. I will wait till 3:30. My 2 o'clock or your 3:30, 15 minutes before that, while having munching my lunch, I will just open and see what is the trade to be done and just finish. I may have to book some loss in the shorted options of 18,150 which I have, but I will roll it down to maybe whatever the lower circuit, whatever the value at that particular time.
Yeah, let's not scare people over the weekend. In any case, this video is going to be released next week only. This is not
Okay.
going to be
So,
released tomorrow
so
or day after. So
okay.
there's nothing to
So
worry about. Don't be
let
scared. Today is
don't
20th
so
May.
people don't, so if
2020.
anything happens in the next week, people don't troll me on Twitter. Okay, Kali Zaman bol ke. Okay. Okay, so in case anybody needs to speak or anything, so what you are going to use YouTube or
Yeah, what I would request is, I mean, though his Twitter handle DM is open for everyone, I would request people to comment on the YouTube video because that is how others can see the comment. And I would request you, Shiva, to periodically, whenever you get time, maybe once in a day, twice in a day, to look at the comments and reply those comments because you are the best person to reply rather
sure,
than us. You know.
sure, sure. And just in case people need to contact me on Twitter, my Twitter ID is same as my surname. And even my Gmail ID is the same, Galrani at Gmail. In fact, your old DECMA video for USD INR, still people keep on asking me for the Excel file to use it. And I still share with people, like even yesterday, 2 days back, I had shared with few people. So
Yeah.
I never like ignored anybody's message because I know everybody
Yeah,
wants to grow.
yeah. In fact, that is why I always appreciate you are always helpful. But my point is, people should not ask in private. Why there is no harm in asking on the YouTube comment
Exactly.
because others
But
can learn from that. As simple as that.
but not everybody is openly what you call
Yeah, I
open
know.
to show their ignorance. Let me put it that way. Many people feel
But
that okay, they may ask a stupid question which may not be stupid at all, but then people don't want to come
let
out
me
in the
tell you
open
one
and
thing that this is something which I always say. You might feel this is a stupid question, but the same stupid question might be there in other 50 people's minds.
exactly, who may not even have the strength to ask. At least you
Yeah,
somebody had the strength to ask one to one. But okay,
yeah.
so it's better. So for me, I know that nothing is stupid. There is no nothing called stupid question. Everything can be answered
So
easily.
be feel free to ask him questions, and like I said,
So
more so on the YouTube video. And I hope you enjoyed this video, and there is a lot to learn, and especially for people who have a long-term portfolio. Even if you don't have, you should make a long-term portfolio. It's not only about intraday options trading or weekly options trading. There is life beyond that, and you should make a long-term portfolio. When to start, how to start, that is a different ballgame altogether. But how to hedge it is something which is a big lesson today, and hope you liked it and do subscribe to